opportunities. When we talk about momentum trading, what exactly do we mean? Momentum trading means identifying those stocks which have a strong bull or bear grip. That is where you have steep movements in the stock price. And whenever you are able to spot such opportunities, you can have a very good risk-reward ratio. Always remember that it is the risk to reward ratio which is what matters in your successful trading or investing journey. So friends, I hope that you'll find the content very useful and you'll be able to make a successful career in your trading and investment journey. So before we get further into understanding what these momentum strategies are and what can help us identify momentum stocks, it is very important to understand what are the indicators that we are going to use. I'm assuming that you have already been through the course on the basics of technical analysis that I have curated with Upsurge, where we have covered all these indicators in detail. Don't worry, we will still summarize these indicators as we move ahead and as we discuss these momentum trading strategies. So stay tuned friends and watch out for the next video where we start covering a lot of such strategies which can help you become successful traders and investors. Good luck. Hi friends, let's talk about momentum trading using moving averages and ADX. To summarize and to give you a recap, let's talk about moving averages. As you can see on my screen, a moving average line is a plot of the average price line for a defined look-back period. Say if you're talking about a daily time frame and a 10-period look-back, then the moving average line is calculated by looking at the average closing price for the 10 price points or the 10-day period. Remember, moving average is always based on the closing prices. The moving average will help you give a clear picture of the stock movement, whether it is an uptrend or a downtrend. Moving averages also typically act as a support and resistance, and one can plot multiple moving averages and identify areas where there is a smooth congruence of moving averages across multiple periods. As we have discussed in the course on technical analysis, these can provide fantastic trading opportunities, and this is one of the setups which can be used for momentum trading when combined with another indicator named ADX. Before we move on to what is ADX, let's talk about the two types of moving averages. The first one is your simple moving average and the second one is your exponential moving average. When we talk about simple moving average, we give equal weightage to all the previous price points. Whereas in case of an exponential moving average, we give more weightage to the recent price point as compared to the older price points. In technical analysis, what is more important is the recent price action and the recent sentiment rather than the old sentiment. That is why we extensively use exponential moving averages in all our analysis, and throughout this course, wherever we are using moving average as one of the supportive indicators for momentum trading, we are using the exponential moving average. Bear that in mind. Moving on, the ADX is another indicator which will help you identify whether the market is trending or not. It will help you. When we talk about simple moving average, price for the 10 price points or the average closing price for the 10 price points or the 10-day period. Remember, moving average is always based on the closing prices. The moving average will help you give a clear picture of the stock movement, whether it is an uptrend or a downtrend. Moving averages also typically act as a support and resistance, and one can plot multiple moving averages and identify areas where there is a smooth congruence of moving averages across multiple periods. As we have discussed in the course on technical analysis, these can provide fantastic trading opportunities, and this is one of the setups which can be used for momentum trading when combined with another indicator named ADX. Before we move on to what is ADX, let's talk about the two types of moving averages. The first one is your simple moving average and the second one is your exponential moving average. When we talk about simple moving average, we give equal weightage to all the previous price points. Whereas in case of an exponential moving average, we give more weightage to the recent price point as compared to the older price points. In technical analysis, what is more important is the recent price action and the recent sentiment rather than the old sentiment. That is why we extensively use exponential moving averages in all our analysis, and throughout this course, wherever we are using moving average as one of the supportive indicators for momentum trading, we are using the exponential moving average. Bear that in mind. Moving on, the ADX is another indicator which will help you identify whether the market is trending or not. It will help you filter those periods or those phases in the market where there is no clear trend, and you should typically try to stay away from trading when there is no trend visible in the market. Whenever the ADX line is rising, it means that there is a trend that exists in the market, and whenever the ADX line is falling, it means that the trend is dying or the trend is subsiding. Do remember that the ADX line is only telling you that the market is trending or not. It is not telling you whether the market is in an uptrend or downtrend. Now, with this information, let's try to understand this strategy along with the rules. As you can see on my screen, the rules for this particular strategy using moving average and ADX would be: number 1, you need to follow the primary trend. That is, if the stock is in an uptrend, you follow the uptrend and you try to be a part of that uptrend by identifying trending phases and being a part of the trend. Number 2, you need to identify the congruence of moving averages across the price action. If you have congruence of moving averages like 10, 20, 50 period moving average, that is the zone you need to focus on, where you'll be able to identify some good trading opportunities. Number 3, watch out for volume expansion. In case you have volume expansion with a price rise, that means that the buyers are more aggressive. And in case you have a volume expansion with a price fall, then it means that the sellers are more aggressive. Number 4, the ADX should be rising, which means that the market should be trending. And finally, all the candlestick patterns that take form during those periods, they should be supportive of the bull or bear view that you are able to carry. Let's see an example and try to understand this better. As you can see on my screen, I have the chart of Britannia Industries on a daily time frame, and I have applied 3 moving averages here: 10 period or 10-day moving average, the 20 period or 20-day moving average, and the green one, that is your 50 period or 50-day moving average. When the moving averages are all and the green one, that is your 50 period or 50-day moving average. When the moving averages are all coinciding and they are converging after a visible downtrend, it is indicative of the fact that there is some bull action being developed. Now, if I carefully observe the candlesticks and the volume profile, there is a strong hammer candle that has formed here, and there is a strong pickup in the volume, although there has been massive supply as well, which is followed by a bearish engulfing candle. But if I follow this setup now, I don't have a trade anywhere here, but if I keep on following this setup, this is where I get an entry, and I can be a part of this particular trend and take an entry at around 3300 and cash in a 10 to 15% return. Similarly, you look at this particular setup, which I have highlighted as setup number 2, again a confluence of moving averages plus a bullish engulfing candle, and then followed by few more bullish engulfing candles with pickup in the volume. And another example here, a setup number 3, which I have named it as, the stock is again consolidating and then it is giving a quick up move. Do notice that whenever the stock has been for a long period of consolidation, the moves are much quicker and steeper. When the stock is consolidating, the moves are much steeper. Like if you consider this entire thing as a consolidation, then the move is quite steep, followed by a consolidation, followed by a steep move. Now, bringing our focus down to the ADX, around setup number 1, this is where the ADX started peaking, which means the trend is now coming into the price action. This is where the ADX actually peaked well, which is again indicative of the fact that the trend exists in the market now. And look at this, around the beginning of November 2022, the ADX peaked steeply, indicating a very strong trend. And since this was a bull trend and a bull candle, it was a strong bullish uptrend from 3800 to almost 4400 levels in a matter of 1 month. If you want to understand the setup 1 more carefully in the context of candlesticks, this is the volume spike that we had spoken about. This is the hammer candle, again a hammer candle, confluence of all the moving averages, and then you can see this particular bullish candle and this particular bullish candle, which is giving you a view that bulls are back in the game and they are trying to take the control back from the sellers. This is the zone where ADX has also started picking up. Talking about multi-time frame analysis in the context of moving averages using ADX, one can spot these kind of scenarios on a daily chart and go to a smaller time frame chart like hourly chart or 2-hour chart to understand the setup better and to define a better entry and exit. So I have now plotted a 2-hour chart for the same period of setup 1 that we had seen. And if you notice, the ADX has started peaking up around here, and this bullish candle was the candle for me to define my entry. And I can take an entry somewhere around this level, which is 3300, with a stop loss of almost 3200 levels, and look at this rally, 1:3 risk and reward ratio. So friends, I hope that this video was informative and you are able to now understand how you can combine two or more than two technical indicators to arrive at meaningful and explosive trading decisions. These indicators help you identify momentum in the stock price movement and be a part of that momentum with a very favorable risk and reward ratio. Hi friends, in this video we'll talk about positional trading using moving averages. While we have already covered momentum trading using moving average and ADX, in case of positional trading as well, moving averages give you fantastic opportunities for investment and positional trading. So let's try to understand these with the help of an example. Before we take an example, let's understand the rules. So as you can see on my screen, rule number 1. Positional trading using moving averages can only be applied on higher time frame chart. I normally prefer to apply it on a monthly time frame, but minimum it should be applied on a weekly time frame. Rule number 2. We are going to use a 30 period moving average. We are not going to use multiple moving averages here. We'll just use a 30 period moving average. So in the examples I'll be covering, we'll be either using a 30-month moving average or a 30-week moving average. Do note, when I say moving average, I imply exponential moving average and not simple moving average, because throughout the trading journey and throughout my analysis as well, I prefer using exponential moving averages as compared to simple moving averages, for the only reason that these exponential moving average calculation gives more weightage to the recent price points, and it is more important to note that the recent price action has more value as compared to the old price action. Third, we need to also analyze the candlestick formations that happen around the moving average rule that we are going to discuss. And fourth, whenever the stock is coming out of a long consolidation or a long sideways journey, that time you will be able to spot very good trading opportunities with a very good risk and reward ratio. So let's look at an example to understand this better. I have taken the chart of Britannia Industries on a monthly time frame, and if you notice here, in all the circled areas, I can see that whenever the stock is coming down, it is almost taking a support at the 30 moving average and bouncing back. If I notice this particular zone here, the stock was falling, it was in a visible bear grip, and then I had a hammer candle formation here and the stock bounced back. Similarly, I had a strong bear grip here where the stock went down significantly until 2000 levels, but then it closed around 2500 levels. The next candle that formed was a strong bull engulfing candle, which means that the bulls are back in the game, and then there was a fantastic up move. A similar formation was also visible around the beginning of 2022, where we had a small body candle which indicated a bearish reversal. This was more of a bullish harami kind of a pattern in formation, followed by a huge green body candle. So these are the indications that whenever your stock is respecting a particular moving average on a higher time frame and the price is around that level, you can identify buying opportunities in that particular stock. Let's look at one more example. On my screen, I have the chart of Asian Paints, again on a monthly time frame. I have circled out a few areas here. This can be one zone, this can be one zone, and these are few other zones where the stock price was almost equal to your 30-month moving average. And whenever the stock price was around that area, it bounced back from that level, indicating that the 30-month moving average is a very strong support region for this stock. And unless the fundamentals of this company has changed and has gone down, you should look at identifying buying opportunities around these zones. And mind you, these are not trading opportunities, these are investment opportunities, because these areas or these situations take time to develop, sometimes months and sometimes years. So you have to follow this diligently, and whenever you get an opportunity like this, you take the entire cream and be a part of the entire trend that follows. If you notice here, it was a bearish grip followed by a bullish engulfing around the 30-month moving average. It was a hammer candle formation around the 30-month moving average followed by a bullish engulfing. Again, a bullish engulfing with a gap up opening in the monthly time frame. Again, you had a lot of lower body shadows with the shadow length continuously decreasing and the demand zone going up, finally followed by a bunch of doji candle and a hammer candle. Then we had a long body green candle. So all these are signals that there is immense buying pressure or aggressive buying happening at these levels, and you should not ignore these levels. And if you had been a part of these moves, you could have made fantastic returns in a matter of few months to a year. Now let's take the example of a stock or an index which is in a downtrend and see how moving averages can act as a resistance in such cases. If you can see on my screen, I have the chart of Nifty Pharma, and this time I have taken a weekly time. As you can see, the index was in a visible uptrend, and then there was a reversal of the trend, which is indicated by these small body doji candles, an inverted hammer candle, and a huge bearish candle. And then the moving average line started acting as a resistance. Around all the area where the price did try to come outside the moving average line, we can see the candle formations which were not supportive of that fact. It was still indicating that there is immense bear grip possible and the bulls may not be able to take the control back. And that is what we saw. That around all these zones, there was a top being formed and again the index came down. A top being formed and the index again corrected. So whenever you are trying to identify long opportunities, you should not be identifying long in this particular setup unless you see a reversal which can be indicated or identified by trend reversal patterns in candlesticks. Also, if you are long on this particular index, then you might want to book out your longs around these levels where the trend is reversing, and you might want to again re-enter when the trend is reversing back and converting itself into an uptrend. Now I have used one more example where I have taken two moving averages to show how convergence of moving averages can be used to identify positional trading opportunities. On my screen, I have the chart of ICICI Bank on a weekly time frame. I have applied two moving averages here, a 10-period average, which is the red line, and the 20-period average, which is the orange line. As you can see, this was the first sign for me that there is a bear grip that is line. As you can see, this was the first sign for me that there is a bear grip that is slowly building up in this stock, although there was a bullish engulfing that negated that. This was followed by a spinning top kind of a pattern formation, followed by a gap down opening with a huge bearish candle and a crossover of the moving average as well. This was a clear indication for me that this stock has now entered into a bear grip. So if I am long on this stock, I may want to exit my long around these areas. And then the stock came down drastically. Do note that this was also the period of lockdown where the entire world was facing a pandemic and the stock markets globally corrected a lot. After that, this was the area around September of 2020 where the stock gave me a reversal signal. It gave me a bullish engulfing followed by a gap up opening and a huge green body candle. So this is how I would be able to identify trading opportunities. I can then go to a smaller time frame chart like daily. I can see the support, resistance, and accordingly plan my trade. I can define my stop loss as well as my targets. And whenever you are analyzing these kind of setups using a higher time frame like weekly and monthly, your targets would be quite huge, along with your huge stop losses as well. But you need to look at the risk to reward ratio. So friends, I hope that this video was informative and you are able to understand how a simple tool like moving average can be used to identify positional trading opportunities as well. So practice and practice as much as you can, because only the practice will make you confident and perfect, and you'll soon be able to identify such opportunities in your trading and investment journey. Hi friends, I hope you are able to add some value in your trading and investing journey by the help of this course. In this video, we'll talk about spotting trend reversals using candles and RSI. This is a very interesting topic and something which I really love, because the setups which I identify using these strategies give me a very good risk to reward ratio in a matter of few weeks to few months. So let's try to understand this strategy better, and let's start off with the rules that we are going to follow in this particular strategy. As you can see on my screen, we'll be having two time frames that we'll be analyzing, a higher time frame and a lower time frame. And for examples, I have used a weekly plus daily combination. If you recollect, multi-time frame analysis adds another dimension and flavor in the overall analysis and the overall setup. So I always prefer to follow multi-time frame analysis, and this is one such strategy where I'll be following a multi-time frame analysis to help understand the performance of a trade. Step number 1 for the higher time frame, in which case I have considered a weekly time frame. You need to identify trend reversals on higher time frames. For example, if a stock is coming down, you need to identify the candles and the patterns it is forming, and if you see a reversal pattern in the formation, you should not ignore such stocks. First rule. Rule number 2. Monitor the RSI levels and the zones beyond which the RSI is not able to sustain. If the RSI say is not able to sustain beyond a particular zone historically or in the recent period, mark out that zone. 3. Analyze the candle formation that I have already covered. If your candle formation is giving you a reversal signal or a reversal pattern, don't ignore it. And 4 and final, your price should be more than the 30-week moving average or the 30-period moving average. Again, I'm inferring to the exponential moving average when I use the concept moving average. And conversely, if you are looking at a short setup or a sell setup, then your price should be below the 30-period or 30-week moving average. Step number 2, that is your lower time frame, in which case it is daily. You need to check for base formation using candles and using support lines. Number 2, you need to look at the candle formations as well. And number 3, you need to also analyze the RSI, similar to how you analyzed it in the first step for the weekly time frame chart. Let's take an example of a stock in a downtrend and spotting a reversal of a stock in the first step for the weekly time frame chart. Let's take an example of a stock in a downtrend and spotting a reversal of the downtrend. On my screen, I have the chart of Lincoln Pharma on a weekly time frame. And if you see, the stock is in a visible downtrend, forming a lower top, lower bottom, lower top, lower bottom formation. If you notice here, there is a bunch of small body base candles here. There is sort of a hammer formation here, and the demand zone is continuously shifting upwards. That is the first observation I have. And second, this moving average line, the 30-week moving average, which was acting as a resistance, has slowly started acting as a support. And here I have 2 doji candles as well. So this is the first indication that there is some reversal that might happen in this particular downtrend. And second, if I notice, the RSI, which was continuously drifting downwards, indicating that there is no bull momentum, has slowly started to pick up around the month of October and beginning of November. So now, if I want to go to a smaller time frame, that is around the month of October and November, it will make the picture very clear. I have gone to the daily time frame chart of Lincoln Pharma and I have plotted the same thing, a 30-period moving average along with the RSI. If you notice here, there was a visible downtrend, but there was a visible uptrend as well, because there was buying pressure that was here. That pressure shifted upwards and the pressure was continuously shifting upwards. Second observation I can find here is that the stock was trying to form a base or a bottom, which means the stock was not ready to sustain below this level that I have marked out here, which is around 270 odd levels. And third, the RSI, which was not willing to stay above 60, is now crossed the 60 level and staying above 60. These are all favorable indications for me. And if I look at the candle formation here around my entry zone, it is a hammer candle, which is a bullish candle again. So all these are indications for me that I can probably take a long entry at around 300 odd levels with a stop loss of around 285, and I can have a good risk to reward ratio. And if you see the performance from that level, from 300 odd level, the stock went up to 350, 360 odd levels, almost a 20% return in a matter of 2 to 3 weeks. So this is how you can get a very good setup with a very favorable risk to reward ratio. In this case, it was 1:4. So friends, this is how you can identify trend reversal setups using a simple concept of candlesticks and moving average along with RSI. And whenever the RSI is picking up, it is a clear indication that momentum is being built up in the stock. That is why I call this a momentum trading strategy using RSI and candles. Now let's take the example of a stock which is in a visible uptrend and try to understand the same rules. On my screen, I have the chart of Sudarshan Chemicals to begin with on a weekly time frame. I can see that the stock is in a visible uptrend, forming a higher top, higher bottom, higher top, higher bottom, higher top, higher bottom formation. The RSI is also continuously drifting upwards, which is indicative of the fact that there is a strong bull pressure in the stock. The first indication that bears might kick in is somewhere here, where I see some kind of a confusion and some doji candles being formed, which means that there is some fight between the buyers and sellers. Also, if you notice, all these candles here have a long upper body shadow, which means there is tremendous supply at these levels. And then this candle was a confirmation candle for me. This is a long red body candle. So I know that this stock is now slowly getting into a bear grip, and I might be able to find some short opportunities, or I might want to exit my longs if I have a long position in this stock. One might argue that this green body candle was negating the entire bearish candles that formed. Yes, but then if you notice, there was almost a dark cloud cover pattern being formed as well. So we need to look at the entire setup and not just candles in isolation. And this was the confirmation candle that the diagonal trend line is breached with a long body red candle. So some momentum is being built up in this stock and some selling pressure is witnessed in this stock. Now let's go to the daily picture or the lower time frame and try to understand what this situation conveys to us. So as you can see on my screen, I have now the chart of Sudarshan Chemical on a daily time frame around that same time which I have covered in my previous slide. If you notice carefully, the moving average line, the 30 period moving average, which was acting as a support, has started acting as a resistance after a period of brief consolidation. Second observation is that the RSI, which was sustaining well above this 50 zone on the daily time frame, is now going below the 50 zone and not able to cross that 50 zone. So this is a very good signal and indication for me that I might want to book out my longs at around these levels, that is 650 to 700, or if the stock has a short setup opportunity in the FNO universe, you might want to identify selling opportunities or shorting opportunities as well. So I hope that this video was informative and you are able to now understand how to gauge momentum built up and momentum loss in the stock using RSI and using candlesticks. Hi friends, let's cover a momentum breakout strategy in this video. I'm sure you would have heard people talking about this term breakout. What exactly do we mean by breakout? Whenever your stock is in a phase of consolidation or the stock price is within a defined range, and suddenly the price goes beyond that defined range on the upside or the downside, that is what we call as a breakout. And to identify breakouts, we'll make use of an indicator known as Bollinger Bands. I'm sure you're already aware of this indicator, but I'll briefly summarize it for your advantage. As you can see on my screen, Bollinger Bands are indicators used to identify potential breakouts, and these Bollinger Bands typically act as a support and resistance also. Normally, you would notice that whenever you have a low volatility period where the stock price is not very volatile but in a very small zone, a low volatility period will typically be followed by a period of high volatility and vice versa. And finally, whenever you have a squeeze or constriction in the Bollinger Band, that is a period of low volatility which you should not ignore. The Bollinger Band as an indicator comprises of three things: the upper band, the lower band and the middle line. The middle line is the 20 period simple moving average. The upper band is a 2 standard deviation from the price and the lower band is a negative 2 standard deviation from the price. Let's try to cover the rules that we are going to implement here. We will again be doing the analysis on a multi-time frame, and I have chosen weekly and daily combination because this combination works very well for cash equities. For the higher time frame, that is weekly, identify those setups where the Bollinger Bands are narrow or the Bollinger Bands have squeezed. Second, analyze the RSI and the width of the Bollinger Band. Third, your price action in case of a long setup or a bull setup should be between the 20 SMA line and the upper band of the Bollinger Band. And in case of a short setup, your price action should majorly be between the 20 SMA line and the lower band of the Bollinger Band. Now talking about the smaller time frame, that is daily, you need to analyze the volume profile, whether there is a spike in the volume or not. Number 2, we'll also look at the RSI because RSI is one very good indicator to identify momentum in the stock. And number 3, we'll also look at the candle formations that are happening on the daily time frame. Let's take an example to understand this setup better. On my screen, I have the chart of fertilizers time frame. Let's take an example to understand this setup better. Number 3, we'll also look at the candle formations that are happening on the daily time frame. Let's take an example to understand this setup better. On my screen, I have the chart of Fertilizers and Chemicals Limited on a weekly time frame. If you see here, I have plotted the candlestick chart with the Bollinger Bands. The upper band is the 2 standard deviation from the price line. The lower band is the negative 2 standard deviation from the price line. The orange line is a 20 period simple moving average, which is a part of the Bollinger Band indicator. I have again plotted the RSI as well, which is here, which is using the default setting of a 14 period look back. And I have also plotted another indicator, which is a Bollinger Band width. Let's notice what are the noteworthy observations in this setup. Observation number 1. In this zone, the band is very narrow or very squeezed, which is also indicated by the Bollinger Band width. It is very small. Number 2. Your RSI, which was not willing to sustain above 60 level, has now passed this level and sustaining well above this level. That is a good indication for me that there is a bull momentum visible in the stock. So now what I am going to do is, I am going to go to a smaller time frame chart to understand this better. Also do note that all the price action that is manifesting around this formation, the candles are majorly between the upper band and the 20 period moving average, not on the lower side, which is again a good sign. Now coming to the lower time frame chart, which is a daily chart, I have kept only the RSI because I don't want to complicate this chart using the Bollinger Bands again. The Bollinger Band as a filtration criteria or a setup rule is applied only to the higher time frame chart. Now if you notice here, whenever there was a huge opening or a gap up opening, there was a spike in the volume and then the volume subsided. And again, when there was a spike in the volume, there was a huge green candle. And if you notice the RSI which was not willing to sustain above the 60 level is now well sustaining above the 60 level. So all these are good indications for me, and I would have probably taken my entry at around 58, 59 levels with a stop loss of 52 odd levels. And look at the reward potential that this stock gave. From 60 odd levels, the stock went up to 90 in a matter of few days. So this is how you can identify momentum built up in the stock using RSI and Bollinger Bands. Also, you must note that the candle or the price action that is being manifested before this formation, all the candles are typically lying within the upper range of the Bollinger Band, that is between the upper band and the moving average line. Now let's take another example where we see a downward breakout and try to analyze that better. On my screen, I have the chart of Axis Bank on a weekly time frame to begin with. I have plotted the Bollinger Bands, I have plotted the RSI, and I have plotted the Bollinger Band width. The stock was in a visible uptrend and then I saw a period of consolidation here. This was the first signal for me that this uptrend is going to reverse and maybe it can pause the uptrend or it can correct the uptrend. So after a small correction, the stock went into a consolidation phase. Remember friends, this is your inverted hammer pattern that is visible here. If you notice here, there was a bearish harami pattern in the formation, which again gave me a confirmation that the stock is probably going to get some bear pressure. And also if you notice, after this hammer formation which was negating this bearish engulfing or the bearish harami pattern, there was no confirmation pattern or candle that I could spot. So there was a defined bear pressure building up in this stock. If you notice the RSI now, the RSI which was sustaining well above the 50 levels has now gone below the 50 levels and the Bollinger Band width is quite narrow. So I may be able to get a very good selling opportunity in this stock. So if I am having a long, I may want to exit my long at around these levels, which is 550 to 600 odd levels. Now coming to a lower time frame chart that is daily, as you can see on my screen, this is the time which I had spotted in the weekly time frame. So I can notice that majority of the candles here in this zone are falling between the moving average line and the lower band of the Bollinger Band indicator. And second, there is slight volume pickup in the selling candles and again huge volume pickup in the follow-up selling candles. If you notice the RSI which was sustaining well above 45-50 levels is not ready to go beyond that level anymore, and the RSI is now gone below 40 levels, which means that there is no bull grip remaining in the stock and bears have taken full control of the stock. So if you had this kind of analysis, you can either exit your long positions at the peak and you will be able to identify buying opportunities later at a lesser price, or you might want to identify selling opportunities here, which in this case was a sell below 559 with a stop loss of 566. Or if you would want to identify a shorting setup in the stock, then you could have taken a sell entry below 559, 558 levels with a stop loss of 576, and look at the down move the stock gave. It came down to almost 400 odd levels. So this is how you are able to identify breakouts on the upper side or lower side using Bollinger Bands and using RSI. Friends, you can practice these kind of setups and try to identify these setups in the historical charts and historical data for any asset class that you would want to practice on, and you'll be able to see that in most of the cases these setups have worked fantastically well. Practice as much as you can, because that is what will help you get the confidence to identify such opportunities. Stay tuned. In our next video we'll cover such few more interesting strategies. Hi friends, in this video, let's talk about identifying momentum using MACD crossovers and RSI along with candlesticks. Let's try to briefly summarize what do we mean by MACD indicator. As you can see on my screen, MACD is an indicator which shows you the relationship between two period moving averages, that is a 12 period and a 26 period moving average. The MACD indicator comprises of two parts, your MACD line, which is the difference between your EMA 12 and EMA 26, and a signal line, which is a 9 period moving average of your MACD line. Whenever your MACD line and the signal line intersects, these are known as crossovers, and there can be two types of crossovers, a bullish crossover, also known as a golden crossover, and a bearish crossover. Whenever your MACD line crosses the signal line from below, it is known as a bullish crossover, and whenever your MACD line crosses the signal line from above, that is known as your bearish crossover. Let's work out the rules that we are going to apply for this particular strategy. Rule number 1. Identify MACD crossovers on the daily time frame chart. This is not a multi-time frame analysis, but we can still use it in the form of a multi-time frame analysis. The example that I am going to cover here will be from a single time frame analysis on a daily chart. So we identify stocks which have a MACD crossover, either bull or bear in the daily time frame. Whenever we have a bullish crossover, these are the rules that we need to follow. The price is more than the 30 period moving average, the 30 EMA. We analyze the RSI, we analyze the candles, and we analyze the volume. Similarly, for a bearish crossover, the price should be below the 30 period moving average. We analyze the RSI, we analyze the candles, and we analyze the volume profile. Let's understand with the help of an example. On my screen, I have the chart of Axis Bank. We analyze the candles and we analyze the volume profile. Let's understand with the help of an example. On my screen, I have the chart of Axis Bank on a daily time frame. If you notice, the stock was in a visible downtrend with the moving average which started acting as a resistance. This is your 30 period moving average or the 30-day moving average which I have plotted. Somewhere around here is when I saw that there is a bottom kind of a formation because there was a doji candle here, and here is when the moving average starts acting as a support. If you notice, this is where I have a crossover in the MACD as well, and if you notice the RSI which was not willing to sustain above 50 odd levels has now sustained well above the 50 odd levels. So this is where the pullback came, and this is where I can try to identify a buying opportunity. Also, if you notice the volume profile, there was a spike in the volume when these candles were formed, and there are more number of bullish candles with a bullish engulfing pattern as well as compared to bearish candles. So this is how you are able to spot that there is a momentum that is being built up in Axis Bank on a daily time frame. And if you notice your risk and reward, you had a risk of almost 25 odd points and the reward potential was almost 100 odd points of a 1:5 risk reward ratio. Now let's take our opposite case where we would like to identify a breakdown or a momentum loss. On my screen, I have the chart of Kotak Bank on a daily time frame. The moving average, which was acting as a support when the stock was in a visible uptrend, has started acting as a resistance around this particular area. What I notice is that there is a slight pickup in the volume as well, and there is a bearish crossover in the MACD. This bearish candle here after a inverted hammer kind of a candle formation itself is a clue for me that the bears are now coming into the picture and the bull run might not continue. Second, here there is a squeeze in the price action and the price is range bound, which means there can be an explosion on any direction, and since the candles are more indicative of a bearish explosion, this is what happened. And the crossover was also of a bearish nature, as we can see. So if someone wants to identify a trading opportunity here, you had a 60-point risk where your entry was at 2050 and your stop loss was almost 2110 and your reward potential was almost 400 points. So this is how you can spot momentum loss or momentum build up using your simple concepts of RSI, MACD and volume. Do note that I have covered these examples from a daily time frame perspective, but here also if you want, you can apply multiple time frames, in which case you would look at the overall trend and pattern in the daily time frame, and then you might want to go to a 1 hour or 2 hour time frame to identify your entry and exit levels. Do remember that your support and resistance lines are very important whenever you are defining your entry and exit. Thank you. Hi friends. In the context of trading using MACD crossovers on a smaller time frame to identify momentum, I would also want to take a small video and brief you about how we can do positional trading using MACD crossovers and RSI analysis. I understand that not everyone can devote time to trading on a day-to-day basis, and there would be many people who would want to take positional investments in good quality stocks with a good setup. That is why we are trying to cover some positional trading strategies as well. In this video, let's talk about MACD crossover for positional trading. Whenever we talk about positional trading, we have to always be mindful that we are looking at a higher time frame chart, minimum weekly, preferably monthly. So in this example that I'll be covering, I'll be taking the case of monthly charts. As you can see on my screen, let's understand the rules that we are going to apply for this strategy. We will try to identify MACD crossovers on a higher time frame chart, that is monthly. We will try to identify bullish crossovers where the price is more than the 20 moving average. We'll look at the candle profile and the RSI profile. Similarly, when it is a bearish crossover, we'll try to see whether the price is below the 20 period moving average. We'll analyze the candle profile and the RSI profile. Do note that I am using a 20 period moving average in the case of a monthly chart as against a 30 period moving average, because 20 period moving average will give you better signals and early signals. So let's understand this better with the help of an example. As you can see on my screen, I have the chart of Mahindra & Mahindra on a monthly time frame. I have plotted the candlestick chart with a 20 period moving average. I have plotted the MACD and I have plotted the RSI. If you notice this particular section where there is a bearish crossover in the MACD, you can see that the stock which was in a visible uptrend gave you a trend reversal pattern somewhere here. You had a small body candle followed by a bearish candle, followed by another bearish candle. So if you have a long position somewhere here, you might want to book out your longs and you might want to wait for the correction to reverse. If you also notice the RSI profile, the RSI which was sustaining well above 55 is now gone below 55 and not able to sustain above 55 at all. This shows that there is a reversal of the trend and you might want to book out your long positions. And now coming to the opposite scenario where I want to take up positional investing long position. I would want to wait for the EMA to act as a support and the price to go above the EMA, point number 1. Second, I would want to wait for a bullish crossover in the MACD which I can see somewhere here. And third, I would also want to visit the RSI profile, which is now telling me that the RSI which was not willing to sustain above 55 odd levels has gone beyond 55 and well sustaining above that. If you notice the candle profile as well, after a period of 4 bullish candles, it consolidated for a few months and then again gave a fresh breakout and a fresh uptrend. So this is how a higher time frame chart can give you a very good positional investing opportunity. Taking one more example on my screen, I have the chart of Bharat Forge on a monthly time frame. If you notice here, I have the 20 period moving average which has slowly acted as a resistance and started acting as a support. I have a bullish crossover in the MACD and the RSI which was not willing to sustain above 60 has started sustaining above 60. So I might want to go to a smaller time frame to identify my entry, which would probably be around 500 odd level, has started sustaining above 60. So I might want to go to a smaller time frame to identify my entry, which would probably be around 500 odd levels, and book out my longs at around 800 levels when I see this reversal pattern in the formation. Similarly, if you notice this area where there is a bearish crossover, I already had a clue that there might be a bear grip building up in the stock courtesy the candle profiles, and if I look at the RSI profile as well, the RSI has now gone below 60 and sustaining well below 60 levels, not able to cross that level. So I might want to book out my long positions here and take a re-entry when the stock reverses back its downtrend. So this is how MACD crossovers with RSI profile can be used to identify momentum in a higher time frame like monthly, and also to identify positional trading and investing opportunities. I hope you found this video informative and you are able to spot these on a higher time frame chart and take better and more informed investing decisions. Thank you. Hi friends, in this video we'll talk about momentum trading using RSI as an indicator across multiple time frames. The time frame that I have chosen for this particular lecture would be weekly plus daily. I hope that you all are aware of RSI as a technical indicator, but I'll still summarize it for the benefit of the audience. As you can see on my screen, RSI is one indicator which is going to give you a measure of the stock's momentum, the speed and the size with which the price is changing, either going up or going down. To calculate RSI, we can use the below equation 100 minus 100 divided by 1 plus RS, where RS stands for the average of the up moves divided by the average of the down moves in the defined look back period of 14 period. So, if you are calculating RSI for a 14-day period in a daily time frame chart, then you will look at the average close on a positive side, average close on the negative side for the entire 14-day period and take a ratio to get to the RS. Now, whenever you have a very high RSI value, what does it mean? It means that the average size of up move is more than the average size of down move. That is why your RS value is more, and accordingly your RSI value is also high. Also, it means that there is a strong aggressive buying pressure in that particular stock in the given period. If you can recollect from the course on technical analysis, we had also tried to bust the myth around the overbought zone of the RSI as well as the oversold zone. The theory around the RSI says that whenever the RSI of a stock is more than 70, it is in the overbought zone and one should exit the long position. However, we have noticed and we have explained it with examples that whenever the stock's RSI is on the higher end, it means that there is defined bull grip and we should try to be a part of that trend until such time where higher top, higher bottom, higher top, higher bottom formation is in place, or else until such time where we see a reversal candlestick formation in the picture. Now, let's understand the rules for this strategy and work out an example to understand the workings. Rule number 1, we are doing this analysis on 2 time frames, that is weekly plus daily. Rule number 2, that is for weekly. Your weekly RSI should be more than 60. That is the first rule. And the second rule, your price should be more than the 30 period moving average. In this case, it will be more than the 30 week exponential moving average. On the daily chart, the rules will be the RSI has to be more than 60 again. The price has to be more than 30 moving average, which will obviously be the case since your price on the weekly time frame is also more than 30 moving average. And also, you will have to look at the candle profile and plot your support and resistance levels. Very simple rules. Now let's try to see these with an example. As you can see on my screen, I have the chart of TVS Motors on a weekly time frame. I have the weekly chart with the 30 period moving average represented by this black line, and I have only plotted the RSI. Now do note that I have plotted a line chart which is based on the closing price. Why? Because even your RSI calculations are based on the closing prices. That is why I am keeping it simple and using a line chart. You may want to use a candlestick chart as well, that's totally fine, because the candlesticks will give you additional level of information which will help you further your decision making. Now I have highlighted 2 zones here. The first zone is where the stock is coming out of a consolidation. It is in a visible uptrend, and around this level is where the RSI goes above 60. And look at the run that it gave, a very quick steep move in a matter of few weeks. Similarly, if you look at this particular situation here, the stock corrected, came down, made a base, kind of a inverted head and shoulder formation as well. And when the RSI was ready to go above 60, look at the quick and steep move that it gave, from almost 600, 700 levels to almost 1000 plus levels. So this is the power of RSI in identifying breakouts. Now let's look at these two setups on a smaller time frame and see how these things manifested. So let's talk about setup number 1. This is the period where the setup number 1 was developed, and if you notice the candle formations here, you are seeing that there is a bullish hammer pattern being formed here, and again a hammer pattern being formed here. You can define your entry at 527 approximately with a stop loss of 480, and this is where the RSI also started going above 60. So this is the first setup, which is very similar to your weekly setup. Now coming to your second setup, which was somewhere around this zone, if you try to look at the candle profiles, the downfall was negated by these 3 bullish candles, and the RSI peaked up steeply and went above 60. You can define your entry somewhere like this: buy above 700 with a stop loss of 650, and look at the phenomenal up move that the stock gave, almost up to 1000 rupees levels. So this is the power of RSI and the power of multi-time frame RSI analysis to identify momentum stocks. Let's look at a few more examples so that this concept is clear. On my screen, I have the chart of Mahindra & Mahindra on a weekly time frame. I have marked 3 different zones where the RSI on the weekly time frame was ready to go above 60, and look at the moves. Look at the moves in each of these situations. Another example of fertilizers and chemicals on a weekly time frame. RSI went above 60 around the beginning of December 2020. Look at the move from 60-65 odd levels to almost 140 levels, 2x in a matter of less than 1 year. Look at this particular move here, which recently started in the month of November 2022. The RSI again went above 60 with the moving average forming a base and providing a nice support. The candle formation also told me that there is a bull engulfing pattern here and the bulls are in control, and look at this move. So this is the power of RSI and power of multi-time frame analysis. So I hope that this video was useful and you are able to take better and informed trading decision using this particular RSI strategy. So friends, I hope that you enjoyed this journey with me, where we spoke about identifying stocks that have a momentum being built up or the momentum being lost, and how to be a part of momentum trading strategies. The strategies that we have covered in this course are the ones which I personally follow in my trading and investment journey. And if you remember, in the course on basics of technical analysis, we had covered all these indicators in a standalone manner with the interpretation. This particular course gives you an insight on how to properly plan and combine 2 or more indicators to arrive at a strategy which you can execute to better your risk and reward ratio and to be a part of your investment and trading journey. So do not hesitate to contact us through the community section, which is going live very soon, where you can post all your queries and doubts. Keep no hesitation, because it's a journey to learn and a journey to grow, and let us be a part of this journey and learn from one another. Thank you and good luck.